Hey guys, it is Gio with Strategic Edge Trading, and today we need to talk about the risk manager. This is far and away the most important thing. I can tell you right now, if there's one thing that I want you to take away from this whole little educational series about how to utilize the SkyMap system, it's that the risk manager is the single most important tool that's bundled in to SkyMap. Uh, it should be its own standalone thing, and it might still be. I might still just release that for prop traders who aren't SkyMap users to utilize, but still, it is the most important aspect. I wasted several years. I wouldn't say wasted because it was good to get all that fundamental training knowledge under my belt. But if I had spent even half as much time working on risk management as I did psychology and because that's the one thing everyone's like, oh, you need to really hone in on your psychology. Well, psychology's great. I didn't freak out when I was in trades anymore, but I still was risking way too much. I was telling myself some fanciful tale about how I am this amazing trader because I find all these awesome entries and yada yada yada, but it doesn't matter because 30 successful consecutive, green days and I get wiped out by one red day because I wasn't managing risk right. And I think a lot of that'll resonate with a lot of people because I know that that's literally uh, just a recurring theme in the prop trading space. Um, and it happens to the best of us. But if you're utilizing the risk manager, it literally can't happen. If you're utilizing it and utilizing it honestly, right? I can't fix something that's broken mentally that says, I'm going to ignore this tool that I bought and paid for. I'm going to not tell it the truth. I'm going to fudge a number in there so it still lets me trade. I'm going to um, disable it on the chart. I'm gonna remove that indicator. If you're doing those kind of things after you should be locked out already, that is on you. I cannot fix that, right? And I wish you all of the best because that is a mental hurdle that is tough to overcome. I can tell you while developing this tool for myself, I kept making up reasons not to use it or to mute it or to. So it's not just you, but I'm telling you from firsthand experience, if that is where your personality is at right now, if that's who you are fundamentally, you can't step away from the charts, you're an addict right now, then that calls for therapy. And no matter how good of a tool I make, it will not save you. Okay. So one of the things that is built in is a tiered risk model, and that's why I want to focus on the tiered risk first. When it comes to that, you set your total accounts available drawdown. If you are trading a personally funded account, I'm going to recommend that your max risk, your 1R number, be very small, right? You should not ever dedicate too much capital to a single trade idea in a personal funded account. You worked hard for that, or somebody in your family did, and you inherited it, right? Or you had an amazing windfall, and you want to protect that. You want to preserve your capital. You don't want to risk too much on any given trade idea. I would say 2% max. If you're a prop trader, most of us are going to be that are looking at this. So let's say you trade a 50K account at Apex, so you got $2,500 initial trailing drawdown, right? If you're trading 2% of that, what are you going to do? What are you going to do? How are you going to take a real position with like even one NQ contract and risk like 10 points, right? That's not a real stop. That's not that's not real trading. That's real hoping. That's really like begging for your stop to get taken out over and over again. You're going to be victim to death by a thousand cuts. You're going to go tilt. It's going to go bad. So realistically, what's a number that if we took a loss, we could then half that position size and still take a trade, right? And if we took another loss, half it again and still take a trade. So, for that 50K example, 2,500, I say 10% initial 1R. So 10%. So if I take a loss, I can then can risk five, and then I can risk 2.5. So 250, 125, 75. At least if I'm trading one contract, I can have a real stop at down at quarter risk. And here's what I'll tell you. I never want you to take a full 1R, 1R, you know, ideally the cloud has told you, hey, this isn't shaping up to be your trade, not a great spot to enter. So if the cloud's telling you that, flatten. You don't have to let your stop get hit. Okay. And when a trade is going your way, I'm really quick to move that thing to break even because you know what? That already feels like a win. Because as soon as I entered that position, I had 1R at risk. And now, and as soon as I can get to break even, now I've got nothing at risk. This is a free trade. If I profit from here, that's fantastic. But I can't lose money, and that's a good mental headspace to be in. But let's just talk about when cold streaks hit, and maybe you don't take the best trades when once you took that initial loss. Maybe now you're at a couple of days of losing, and you're like, what the heck, right? But a losing 3 to 5 trades in a row, I'm going to say that's going to happen regularly. For me personally, with my risk reward model, I need to win something or like 30 to 40% of my trades. That's it. So if I lose 5 or 6 in a row, I lose 5 or 6 in a row. But my risk model was built to handle it. But like, let's say yours wasn't. So you're risking 2% per trade, but you never change it. So your starting account balance is 20,000. You risk 2% per trade. You're risking $400 a rip. Okay. $400 in the clip every time you push a button. If you took 11 consecutive losers, you're down $4,400, 22% in 11 trades. But let's say you hit that same cold streak, but you were tiering down your risk, how I recommend. Your first risk is 400. Ouch. Now I'm on tilt. I lose again 200. Now I got to half that again. I can only risk 100. But guess what? I just stay there until finally something clicks. I get a kick in the butt and I can finally emerge from my cold streak. But guess what? When at the height of that, losing 11 consecutive trades, I only lost 7.5%. Mentally, I can recover from that. My first win, where I get a couple multiples on my initial risk, and I make a good sized dent in that, all of a sudden I'm not so salty anymore. I don't feel like this is insurmountable. Um, your mental capital is just as important as your risk capital, and you got to protect both. And tearing down your risk when you're cold, that is the way. Push your edge when you're hot. Push your edge when a trade is going your way. Yeah, if I was willing to risk 1R initially for, let's say a 2R profit target, and I get 1R in profit, I can move my stop up to my initial entry. When I move my stop, I can move so say I enter here, my stop's here, I get 1R in profit. I can move my stop up to where I entered the first time, enter a whole second position size, and then still take it for that next R. But this time I'm doing it. So I was risking 1R to make 2R, but now I risked 1R total ever. When I added to it, my risk was still 1R, right? But now I just bagged 3. So why wouldn't I want to take those kind of opportunities to add to my position size when I got clear skies, when the BW is telling me I got room to go, right? Those are primo opportunities. So that's initial risk, and that is how I would recommend managing trades that are going your way. If a trade's not going your way, I went short somewhere in here in clear skies, but now it's coming back up and it's looking like drawdown or maybe, but I just might get out because the cloud is now showing a storm scenario that could run all the way up to the storm line. I don't want any part of that. I would much rather just take the break even and that little bit of trailing drawdown because I was in a little bit of profit before it happened and just be out and wait for the next opportunity. There is nothing telling you got to eat a full stop. There is nothing telling you that you got to wait all the way to your profit target if something else is telling you that, maybe this run of the price leg is up. So don't feel obligated to sit there and watch profits dwindle away. Trail out on your safety line. Add to things that make sense to add to, but always move your stop up when you do it. Never be exposed more than 1 R of risk. If you are and you lose, then there's only one thing to do, and that's log it as a violation in the risk manager. But now that we've talked about initial position size or initial risk, let's talk about initial position size because you're going to get that from the risk manager. So we're going to zero this out. In fact, I'll just reset everything to defaults. That way, it's looking like exactly what you're looking at. So initial max risk is set at 2%. Safety thing. Move that to 10 if you're a prop trader. Keep it at 2 if you're trading your own account. Um, so we're going to pretend we're trading prop. We're on the S&Ps, so I know it's the big contract on the chart, but let's just pretend we're looking at micros, 125 a tick. Okay, that is going to generate all of this data here in this table. Oh, it says our current tier is half. We should be at full. All right, so we're at full risk. None of this matters up here until you started taking some trades, and you'll kind of update it day to day as well, because if I end a day having been in a losing streak, I don't just get to start the next day at full risk. No, I got to earn it back. Okay, so we're going to start this with a fresh day, fresh full risk, um, and we're going to say that we are bullish. All right, so the thing is automatically like I wish we were in a live market scenario so it could actually like pick a um pick a working pivot. We could watch price move away from it, but we're not. I'm recording this over the weekend. I'm just going to show you how it works. So this thing, when you say you're bullish, it's going to go to the last low pivot and then however many ticks you tell it as a buffer. So right now I've got a 1 point buffer. You could have a 2 point buffer, three, whatever makes sense for you. But we're 2 points now behind the last low pivot, and that's where we would drop our stop. So like say I were to enter a market order right there, I was going to go buy. I'm not even connected to Pro. Like I said, it's the weekend. So let's say I took a buy order here. I would just drag my stop on that position down here to that level, and now I'm protected. When it comes to how many contracts I buy what the risk manager says I'm allowed to buy. So to have that stop and enter right there, I could enter 20 micros because it's only a 10 tick stop. I mean, it's like I said, this was not real price action. This is end of day Friday. There's no liquidity. So this is a dumb kind of number example. I just want to show you how it works there. So say we took that trade and we lost. We lost 10 ticks, so we lost 2.5 points. We would go in here. We took a full risk. Minus 2.5 was the outcome. You need to own that outcome. What if you added to that position when you were in a little bit of profit, but you didn't move the stop and you ended up taking a greater than full size loss? You'd have to log that as a violation, and your chart is going to shut down immediately because you broke risk. You cannot be trusted right now. Time to honor the risk manager's recommendation. Go buy yourself an ice cream cone. Reward yourself for stepping away when you should, because that's how you develop a good habit. A trader on tilt in this given scenario is going to do what? Come over here, mute the risk manager, and take another trade. I mean, that's not the way. That's the path to destruction, right? So. But we didn't have a risk violation. We just took a full risk loss there. So up here, we're going to say the points lost at the previous tier were 2.5, and then we are going to adjust our current risk tier down to half. So now you'll see with that same trade setup, with the exact same stop of 10 ticks, we're now only allowed 10 contracts. Okay. So here we would now look for our next set of entry criteria. We'll pretend we went ahead and took a trade in there. We'll say at half risk, we made 5 points. Well, guess what? Over here, you'll see that your upgrade threshold has been hit. You only needed to make 1.25 points at half risk to get promoted back to full. So congrats. Points lost at previous tier, now 0. And we are restored to full risk, right? So now we've got 2 trades. That means there's 3 more trades in the clip, and we are net positive 2.5 points on the day, right? So it's like we're starting essentially back at square one. Let's say trade 3, we're back at full risk, and we didn't set our daily point target. Our daily point target on ES 10 points. We're gonna say we take a 8-point trade here. Well, guess what? We are now net positive 10 points. That 8-point full size winner has concluded our trade day. Our target is hit. Target's hit. What if you don't feel satisfied? What if you feel like I'm hot right now. The market's still giving me price action that I like. I wanna trade more. Your edge diminishes over time. Cockiness and being really, really gung ho about jumping back in is just how you end up rushing it, risking more than you should, and on a perfect day where you made your living already, you're 10 points positive on the ES. If you're a trader who's a pro, then you're trading one mini. That's $500 on the day. I mean, that's a living, right? Just saying, you're a prop trader with multiple accounts. You've already built your drawdown up enough that you can trade a mini on 20 accounts. I mean, you just made some people's quarterly salaries in that 10 points. What do you need to trade more for? Well, what are you trying to prove? Okay? Setting reasonable goals for yourself and holding yourself accountable to stepping away, that is the difference between a pro and somebody who is just they're burning themselves out and they don't even realize that they're doing it. It's a real retail Rick thing to do. So honor the risk manager. Be honest when you're using it. Let's talk about a scenario where I didn't hit full. Let's talk about one where I took a loss here. We lost another 5 points. So um, technically, we could still be trading. In fact, let's go ahead and do it. Let's lose one at half too, and we lose another 5 points. So now we've taken 3 losses. We got locked out for the day. We're done trading. Now is the time where we go and we journal and we think about what we did. I mean, it wasn't a miserable day. I mean, total you lost 7.5 points on one full size and one half size. I mean, you didn't lose enough that you should be seeing red and trying to get back into your charts, doing anything crazy. But this is now the time to reflect, to journal, whatever. And it's also the time to set this risk manager up for tomorrow. So, we lost at full, we lost at half. We are now down to quarter risk. Okay. So we need to move our risk tier to quarter. And then we need to look at how many points we lost at full and at half. So at half, we lost 5. At full, we lost 5. Points lost at previous tier, 5. Carryover deficit, points lost at half, 5. Okay. And now we're ready to start trading tomorrow with quarter risk. So it's a new day. We're going to clear this out, make that 0, make that 0, make that 0, make that 0, all the way down. And this is now prepped and ready for a new day's worth of trading where we know that we're starting risk at a quarter tier and we got to make at least 2.5 points at a quarter to get promoted to half. And then once we are promoted to half, we need to make at least 2.5 points to get promoted to full, and we would go from there. And along the way, you've probably already climbed out of whatever little bit of drawdown that you incurred the day before, because you didn't let that thing, get into your brain, wiggle around, make you make bad decisions. None of that happened. You honored the risk manager. You were position sized correctly the entire time you were taking losses. You always honored your stop. You logged your trades. You stopped when the risk manager said you had no more trades in the clip for the day, and now you're back ready to make it happen. So that is how you use the Strategic Edge Risk Manager. I'm looking forward to hearing about how every single one of our traders here in SkyMap is making payouts and has not blown an account since they started using Risk Manager. That's my vision. All right. Have a great day, guys. We'll catch you out there.